Hi, this is January 7, 2021 stock portfolio update. My portfolio is about 18 lakhs. For me, stock investment is a hobby and it is good enough for me if my portfolio beats inflation. I started stock investing on 28th August 2020 and have completed 1 year, and I have some unrealized long term capital gains. My investment strategy is based on earnings. If earnings are good, I tend to buy them. I usually check the PE range and then try to uh, select stocks which are trading below 20 PE. I consider myself a trader, and I have few rules which I normally follow, and I am hoping to stick around through bear market. So the total number of stocks in my portfolio are 112. I know it is on the higher side. So the total cost is 15 lakhs and the current value is 18. Unrealized gains are about 2.65 lakhs. I received dividends of about 17,000 so far. I've realized 51,000, and it is a 40% CAGR. And a weekly gain is 48,000. I really like the quote from the Wall Street. So quick buck artists come and go with every bull market, but steady players make it through bear market. I'm hoping to be one of the steady players, although I have chickened out in previous bear markets. This pretty much sums up my investment strategy. I tend to be passive once I've invested and hope the stock returns. Uh, I initially thought I would hold stocks for long run, but then my understanding is it is good to take some profits or losses. So I tend to buy stocks below 20 P and try to sell them at 30 P. I know it is not a very long term strategy, but it suits me for now. I also trade a dividend strategy wherein I have a threshold for dividend percent yield, and then if the stock falls below that percentage, I tend to buy it, and then I tend to sell if its yield has dropped. Uh, I I tend to take stocks, not tiny cap, but at least small cap. Uh, this is not a long-term strategy where I'll try to hold. It is totally based on the sustained dividend rate and the dividend yield for the current year. Uh, I have not added any new stocks. Oh, sorry, I have not added any uh, new stocks in the dividend yield strategy, but with earnings strategy, I haven't topped up any existing stocks, but I've added FDC, Monarch Network Capital, Tidewater Oil and SPIC, and PFC, and Kotari Petrochemicals. I paid a bit higher price for FDC and Kotari Petrochemicals, but such is trading. I was planning to sell TCI and HCL Tech at 30 PE throughout the week, but they never traded at that price. So FDC, I've bought it at 305. I should have bought it at 290 levels. Monarch, I'm okay. Speak to, but Kotari, it jumped the previous day when I planned to buy. So I paid a higher price for Kotari Petrochem. All these stocks I probably will be adding when the stock price drops 10%. I usually check the quarterly results, and if they satisfy my rules and EPS stays or goes higher, I tend to add even if the stock price drops. I normally don't do deep analysis of stocks. Uh, I actually don't check the cash flow, how the management and things like that. As my strategy is to buy 10 is based on numbers. I tend to buy at a lower quantity. I usually invest 10,000 rupees on initial investment, and then I tend to add when the price drops. I try to hold the stocks as long as the PE is not above 30. As I don't know anything about what the stock does, how the management is, or the projections for the future, as I buy based on the previous year's numbers, it's like driving, looking at the review mirror. But that's the reason why I hold too many stocks. I know it is not. I don't know whether my stocks will perform good or bad. And when I'm buying, I'm just hoping it would do better. Hence, excessive diversification. It may not be a good strategy, but uh, so far it is okay. So I'll try to improve, or maybe once I found a strategy which actually fits my temperament, I'll probably reduce the stocks. But for now, over diversification is just to hedge my ignorance. Eldoco and Tanfac have done well in my portfolio. In my current portfolio, they have given over 100% return, and few of the stocks like IG Petrochem, Gulf Oil Lubricants, and IOCL Petrochemicals, pharmaceuticals are below 10%. I have added considerably in these stocks in my portfolio. I do see that oil and petro related stocks are on the higher side, maybe because of high oil. But if the earnings remain the same, or have fallen within my threshold, I'll continue to hold this. Uh, I have found something in the Morningstar to compare with Nifty 500 total returns index, but I'm not sure whether it is accurate. The 40 CAGR which I've uh, got is without deducting brokerages or taxes on gains or the maintenance charges of the account. I also include dividends in my portfolio returns, hence the 40% CAGR. So until 7th, I think I did a bit better compared to Nifty. And a disclaimer, for me, this is a hobby, and stocks mentioned should not be taken as an advice. Buying what a random guy on the internet is dangerous to your portfolio. This is just for my learning and to show my family and friends. Stay safe and have a great day.